Good afternoon, good morning, good evening, depending on where we are in the world. I'm Nicolas Véron at Bruegel. It's my pleasure to introduce this session of our panel series. And today I will be the embodiment of conflict of interest because I will be both chairing and presenting. Unfortunately, my co-author Tianlei Huang cannot join us today, but I will present our joint paper for him. We have two fantastic discussions for the session, so I will try to be as brief as possible in my initial presentation. The paper is about the largest companies in China and the respective shares of the state and the private sector, but it's very much a conversation starter. So we don't view it as the end of the discussion, but really only at the beginning. I will ask if we can have the slides on the screen, please. And hopefully that will be now. Yes. So the paper was published by Bruegel a couple of weeks ago. As I said, it's co-authored by Tianlei Huang and myself. Tianlei works at the Peterson Institute for International Economics, PIIE. As some of you know, I work both at Bruegel and at PIIE, and I have to express my gratitude to the Peterson Institute because most of the research resources for the project were provided there. But we're here at Bruegel, so we're commenting on the Bruegel version of that publication. The paper is really about analyzing two samples of China's largest companies. So this is across industries, across sectors. We look at the largest companies by revenue as measured by Fortune Global 500. And the reason we rely on that ranking is that there is a lot of analytical work which has gone into building those rankings over the years in terms of checking that the financial information is reliable and things like that. So it's good quality information in our judgment. And the Fortune Global 500, of course, is the largest 500 companies in the world by revenue as identified by Fortune every year. But the subset of Chinese companies in that sample has grown a lot in 15 years. So there were only 15 in the ranking published in 2005 on the basis of 2004 revenue. Chinese companies typically have a financial year which is the calendar year, like many European companies. But in the last such publication in 2021, there were 130 Chinese companies in that ranking. So the size of the Chinese set of large companies has grown enormously, and now there's the largest group actually in the world ahead of the United States. The other samples that we use is one we constructed, but on the basis of very easily available information about market capitalization. So we constructed a yearly ranking of the top 100 Chinese listed companies. Of course, the Fortune Global 500 are either listed or unlisted, but then we look at market capitalization, which by definition is only observable for listed companies. So we look at all listing venues, including the Baroque arrangements known as variable interest entities. All that is explained at length in the paper. And we categorize them in three ownership categories. SOE, state-owned enterprises, for us is where the state has a majority of equity. Conversely, our definition of what we call the private sector, or more rigorously, non-public enterprises, is those where the state has a small or zero equity stake, so less than 10%. Why 10%? Because we think that in the Chinese context, with less than 10% of capital, that doesn't give you a lot of ownership rights, or governance rights, I mean. And then there is obviously an intermediate category, which is technically private sector because the state is a minority shareholder, but it's a large minority shareholder, and we think this is a presumption of effectively state control. So we consider those mixed ownership enterprises practically part of the state sector, even so the state is a minority. So that's when the stake is between 10 and 50%. And how do we observe those ownership structures? The ownership structure can be very complex in China, including because there are different entities within the state that tend to be shareholders of those companies. I will give an example in a minute. But the information that is available is actually transparent enough. So almost in all cases, with very few exceptions, it is sufficient to for the purposes of our categorization. You can discuss whether there are some vehicles of investment that may be controlled by the state and we didn't observe that, but our highly confident judgment on that is that it wouldn't change the picture. And actually, whenever information has surfaced on such cases, some of you may remember the reporting by David Barbosa, I think, on Ping An a number of years ago, which was typically an example of that, that really doesn't change the ownership structure as we observe it. And actually, the Ping An story was before our period of observation. Another thing that makes it relatively easy is that there are very few changes of category. So you could imagine that in China, a number of private sector firms, for example, are transferred to public ownership, and that can happen from time to time, for example, in restructuring of bankrupt or illiquid groups. Some of you remember HNA, Anbang, CEFC, China Energy, and groups like that, which effectively have been nationalized. But there are very few cases like that. And conversely, there are very few cases in the last 15, 20 years of privatizations, at least among those very large companies, which is what we observe here. So if a company starts its life as state-owned, it will probably continue as state-owned, at least in our samples. So the categorization is completely fact-based. We don't make judgments about influence or control. We actually try not to use that vocabulary. We talk about ownership. Almost all Chinese companies comply with the principle of one share, one vote, so that also makes it easier. And we don't follow the Chinese concept of what they call actual control, which exists in Chinese official statistics and also in securities laws and disclosure requirements, because we find it occasionally problematic. We have found cases where that concept, but I'm already going probably too much into the weeds, is not properly complied with. So the definition we have of the non-public sector, you remember less than 10% equity ownership, is actually more restrictive than most of the literature that exists that divides the Chinese business sector between state-owned and private sector. And of course, there is a question which is kind of overarching in this whole discussion of, does it matter? Does ownership matter because the party is controlling everything anyway, including the private sector, and can do what it wants with Jack Ma and all that? Well, we think it does matter. So we have a separate discussion of Communist Party influence in the paper, and of course that's more judgmental and atmospheric, but we think there is a structural and there is a vast literature actually that establishes as fact that there is a structural difference between SOEs and private sector companies in China. So private sector companies are profit-seeking in a way that the SOEs are not. They generate productivity gains in a way the SOE are not. So even if the party, the Communist Party has control freakery over all companies, no matter what their ownership is, it makes a lot of difference for the Chinese economy and its future, whether the private sector is growing or retreating, which is, of course, the allusion in the title of the paper, because this title, The Private Sector Advances, refers to a widespread saying, the state advances, the private sector retreats, which I think is pronounced something like Guomin Jin Tui or something in Chinese, which has been very present in commentary about Chinese economy in the last 15 years or so. So here I give an example, but I won't, if you cannot read it, that's not a problem. I just wanted to illustrate the complexities of the ownership structures. The boxes in red are state-controlled entities. In blue, it's Chinese private sector. In green, it's foreign, in that case, Delta Airlines in the US, and gray is dispersed ownership. And what this chart tells you, and there are other case studies in the paper, is that often in the public sector, particularly, but also sometimes in the private sector, you have very complicated cascades of holding companies and intermediate investment companies. So we have had to do a lot of work to distill that into the kind of ownership categorization that I mentioned. So now for the results. What you see in the Fortune 500 sample, so the largest companies by revenue, is that the share of aggregate revenue that comes from the private sector, which is the green bit of this chart, has been growing almost continuously from zero in the Hu Jintao era to a share which is still a minority. Of course, the SOEs remain by and large the largest companies, but an increasingly significant minority, around 20%. And most of that growth has happened actually under Xi Jinping. And maybe even more interestingly, you don't see a trend change or let alone a trend reversal in the latest years of the Xi Jinping rule. So the last year of observation is, as I said, the 21 ranking of Fortune, which is based on 2020 revenue. So that's what you have on this chart. But frankly, I, for one, and this is of course a personal judgment, will be very surprised if this trend changes in the years ahead, because it looks so much like a structural kind of groundswell of transformation. And we have not published, but we have looked at tentatively at similar charts in other countries where there's a big public sector, including, maybe that will make you smile, Russia and France. And you see much more stability in the last decade in those countries. So there is much more transformation happening in China across that boundary of state versus private than happens at least in the other two countries I just mentioned. And when you look at market capitalization, it's even more spectacular, because the share of the private sector when Xi Jinping was selected to be the next leader was in the single digits. And actually, at the end of 2020, it crossed the majority threshold. So for some time, the private sector was the majority of the market cap of the largest companies in China, and actually of all companies, because the private sector tends to be more dominant among smaller companies. And there was a small reversal last year because of the big regulatory crackdown, of course, that we already alluded to. But the decrease last year is actually very mild. And we looked at the first quarter of 22. The decrease continues, but also very mild. So it doesn't even offset the progress of that indicator in 2020. And there is good reason to believe that with the most recent policy announcements and market trends in China, we will see an increase again from that low point in the middle of 2022, when we will observe it, because we want to update that sample. So if you look at other indicators, I'm not spending any time here, but just to say this is not an artifact. You see it across the board of indicators. The left-hand chart is companies by revenue, so the Fortune 500 sample. The right-hand is market cap, but you also see the revenue line, which is in red. So you see similar trends of increase with some nuances. The blue line in the left-hand chart is assets. So the SOEs are much more asset-heavy than private sector companies, so it's not surprising that the share of total assets of the private sector is much lower than the share of employment, profits, revenue, or simply of number of companies in the ranking. So why is that? We're certainly not suspecting that Xi Jinping is favoring this trend by his policies. This trend is a legacy of the reform and opening up era that started in the late 70s with some bumps along the road, especially with Tiananmen. But there is a long-standing structural transformation, which for us explains the trend. So the point is not that Xi Jinping's policy orientation is not statist. Most likely it is, even so it's always difficult to be certain of anything when it comes to policy orientation in China. But the point is that the policy bias towards SOEs is more than offset by the dynamism of the private sector. So that's basically our tentative explanatory framework. I say tentative because we don't pretend in that paper to offer causality analysis. We test a couple of hypotheses. We show the role of new listings, of sector-specific observations, but by and large, we don't know for sure the cause. But our intuition is the most obvious explanation. It's just that the private sector is so much more dynamic, precisely because it is more profit-seeking. It is possible to think there will be a trend reversal. Actually, there was one in terms of market cap, as we saw last year, but which we don't think is permanent. The point is that it would probably take much more radical policy shifts than even the regulatory storm of last year to reverse the trend. So there is much more in the full paper. I encourage you to have a look at it. We will, as I already said, update the data set in the future, but I will stop my presentation here, and hopefully we can get our discussions on the screen. And shifting to my conflicted role as chair of the session, I will ask if Reinhard Bütikofer can take the floor. Thank you very much.
Thank you very much for your introduction, your chairing, and your presentation, Nicolas. It's a pleasure to share this panel with Alicia and yourself. My contribution to this conversation will be mostly asking questions, I guess. I would readily own up to the fact that you have busted a myth that you quoted, which was the myth that the state advances and the private sector retreats. But I would also argue that maybe this framing of the issue in itself has never been quite adequate, because your differentiation between SOE, MOE, and non-public uh, enterprises is probably much more adequate than this simplistic division between state and private sector. And in fact, I believe that the state is not the issue at the center of the conversation. Rather, what I think we've seen over the years of Xi Jinping's leadership is what I would call a CCPization of the economy. And CCPization can choose different avenues. The state is just a shell for that, as could be an MOE or a non-public enterprise. And the question that I think we should look into is whether the CCPization might have been changing the character of what normally has been dubbed the private sector, or what you call the NPE. The displacement theory that you are quoting in your text, I have no facts at hand to question that displacement theory, but I would encourage you to maybe offer a couple more arguments over whether that could indeed be the trend, because a real displacement would also include, I would assume, that the NPE would move upstream and gain more dominance there. And then also you've seen the trend reversal in market capitalization, and I don't want to make too much of it, but I would point at a discussion that I've seen from the South China Morning Post and other sources, where in the beginning of this year, 1st of March, there's been an article titled "China's Private Sector Struggling with Common Prosperity, COVID-19 and Financing, SOEs Thrive." And there are quite a few voices quoted in that article that point to what could hypothetically be a trend reversal after the end of your of the period that you look at. But I would also again ask the question of whether, in addition to the issue of advance or retreat, we might also have to look at a possible transformation of what is called the private sector. And you mentioned in passing Jack Ma. I would call Jack Ma China's Khodorkovsky. Of course, he has a much more pleasant fate, as far as we know, than Khodorkovsky had. But there are two things that I find comparable. Number one, both of them contradicted the supreme leader and were chastened for that. And this was used to subdue other industrial titans also. So in Russia, Khodorkovsky's fate was used by Putin to tread all the other oligarchs under his heel politically. And I think something similar happened with Jack Ma and the other NPE leaders. And the question is what we consider private today is still the same politically as what we considered private maybe 10 years ago. And another question or series of questions that I would like to ask is about the specific uses that the CCP is possibly making of different forms of ownership. And again, I'm just asking these questions tentatively, and I hope that Alethea and yourself will be able to put some flesh on those skinny bones. Is there, as far as you observe, a differentiation in strategic use of SOE, MOE, or NPE as regards internationalization, as regards innovation, as regards social experimentation, as regards the development of China's interior provinces, as regards anti-monopoly policy and common prosperity? And my last question would be, when you look at the development of the so-called private sector in China, which are the measures that had the most impact on that sector? Which of those measures are precursors or could be considered precursors of similar measures afflicting or impacting international investors? So let me stop there with my questions. Thank you.
Thank you, and that's a fantastic set of questions. Alicia.
Can you hear me? Yeah. Thank you for the invite. It's a pleasure to be here. I have a few slides. I hope they're not too many. First of all, I want to tell everybody listening that the work that has been conducted by Huang and Nicolas Véron is just absolutely humongous. I mean, I've been working with data on this topic for a long time, and I have to say it's very rigorous and very accurate, and I want to thank them for that. I'm going to hopefully you can see my slides. I'm going to
at this point we don't see your slides.
Oh, really?
We see you, which is good, but we don't see your slides, which is maybe less good.
I hope the slides are more interesting. Can you see them now?
No.
No? Oh, I'm sharing the slides. That's a pity.
Now it works. Now it's good. Now
it's good. Okay. So what I want to do today is to broaden a little bit the scope. And I have to make justice to the paper because, as you rightly point out, there is a part of the paper that does go through the hustles and the problems that the private sector is facing more on an institutional front. But I thought I should go through that myself and also broaden the scope because you're looking at the largest companies, Fortune 500. And not because that's going to contradict your argument necessarily, because actually the lower you go into the size of the company, the larger the private sector. And this is logical. Yeah, I mean, if I could go beyond listed companies, it would be even larger. I just have data for listed companies. So the first thing I want to say is that the private sector is relevant, a relevant part of the Chinese economy, no doubt about it. What I'm going to show, though, is that it might not be really increasing as you find, as much as you find when you take all listed companies. And second, and this is the key point I want to make, is that unfortunately, for anybody who's worked with this data, knowing how hard it is, I've come to the conclusion that maybe it's not such a big deal to know whether a company is private or not anymore. And that's the key, because we can work on classifications, but at the end of the day, if the private sector can't fully behave as a private company, then I may as well stop making that comparison. I mean, I'm not saying it's worthless by all means and purposes, but it's blurred. I would use that word, and then I would conclude. So the reason why I will argue this definition of private versus state-owned, and even if you include, mixed ownership, is less relevant, is first because increasingly private companies receive, and this is data from an analysis that we're trying to finalize for Bruegel, as many subsidies as state-owned companies. And this is a trend increasingly. And they don't receive them for no reason. The degree of influence of the party, I would say the government, the state, and the party on the private sector is only increasing. So I'll give a few examples of that. And then, of course, just a thought on the regulatory crackdown. So data on the private sector. This is, well, first of all, I would actually not talk about market cap too much because it's actually hard to compare in the sense that the state companies actually are even mixed ownership companies are only listed partially. So, you're not going to have the same the same effect. Gosh, I cannot put this in silence.
It's okay. Don't be distracted. It's okay with us.
Sorry. So basically, the degree of float is going to be always smaller for state-owned companies, and therefore it's just not going to be as relevant. So I would not use market cap for this comparison. I would use net profit, revenue, asset size, and I would just focus on that. On that note, I just want to show that if you exclude market cap, the difference, net profit, revenue, asset, you see some trend, but it's basically stagnant. You don't see a major increase. And I've done that including and excluding Alibaba and Tencent because they're so humongous that may change the picture, but they don't. Actually, they don't. The other thing I wanted to add is that the share of private versus state-owned ownership is very different across sectors, but it's not the way you would imagine it to be. So, for example, telecom, energy, you could argue these are sectors where you would have a lot of state ownership, and that's exactly the case. But then you have airlines, for example, or industrial material, even autos is basically more than half state-owned companies. So even for commercial activities or simple manufacturing, you still have quite a large role of the state. So I just wanted to show that this is not about like state-owned sectors in Europe where you would imagine that that's where the state-owned companies are. They're actually in many other sectors that one would imagine would be dominated by the private sector, but that's not necessarily the case, or not always the case. Sometimes it is the case. And I have to give you the example. Semiconductors looks here very small, 20%. I just wrote this piece, hopefully we'll publish it soon on the industrial policy on the semiconductor industry for China. And all of those companies that here I need to classify as private actually have received most of their capital from the two big funds, and they are in private. So even there, it's because of the major funding, and this brings me to the next point, which is subsidies. It's very hard to, sorry, I really need to. Are you hearing the phone? Sorry,
yeah, but it's okay. If it doesn't disturb you, it doesn't disturb us.
Yes, it doesn't disturb me. It's really, I don't know how it can ring when the phone is off, but
nothing we can do about that.
Anyway, I just wanted to show you that even for sectors that people would imagine are privately owned, like the auto sector, the real estate sector, actually the share of the private sector is not increasing. If anything, it's decreasing, even for the real estate sector. And finally, for the subsidies, I want to show is the following. It's showing that the number, but this is actually in value of subsidies that POEs receive is simply humongous. It's as much as the state-owned companies. And I think that's quite something that, we need to realize, that how private these companies may be is really an issue. They may be private, but they may be, their governance is no longer clearly or necessarily dominated by private interests. So I wanted to show that as well. And I also want to say that this is not only well-functioning private companies. Actually, what you see here is what's the percentage of loss-making firms that receive government subsidies. And this is much higher for the private sector. So the private sector, the difference is blurred. That's the key point I want to make here. And therefore, the classification sometimes may not lead us to the right conclusions. Why is this the case and how is this the case is really about this tighter grip of the party on the private sector. I think the best example I can think of is this opinion of the General Office of the CCP in September 2020, which basically encourages the United Front departments to strengthen the control on the private sector. I think this is a very, very clear example of, and more specifically, they want the United Front, I mean, CCP wants the United Front to increase the ideological work and influence on the private sectors. It can't be clearer than this, yeah? We could go on national security law, on national intelligence law, on the cybersecurity law, national data security law, and you name it. I mean, it's just very, very obvious that there's been increasing legislation to control the functioning of the private sector. And then this brings us, of course, to the regulatory crackdown. People call it tech crackdown. It's not only about tech. There was also regulatory crackdown on the real estate sector, and guess only private real estate developers have failed, or at least, if not fully gone on bankruptcy, they failed to pay their to make payments on their debt, on their bonds in particular, especially the dollar bonds. But what I'm trying to say here is that these three red lines that were the regulatory mechanism to control the expansion of the real estate sector have mainly been applied, or only been applied actually, to private, again, developers. And then you have the internet platforms with the antitrust law, cybersecurity law, etc., education platforms, all of which are private, which is quite coincidental, if I may. So to conclude, I think we can agree that, you know, or basically depending on the sample you take, that the private sector may be experiencing some increase. I mean, in the data I'm showing, which is broader, but again, only listed companies, it could still be not the right conclusion. Maybe I see more of a stagnation, but in a way, the key point here is because the difference is blurred between state-owned and private companies, maybe the question would be, I would ask myself is, how different are they? How can we measure the, to me, vanishing difference, or at least smaller difference? And is that a fact? I mean, is that what you think is happening, rather than necessarily the size? And in that regard, I think the increasing role of the CCP in the governance of the private sector comes from basically data sovereignty, common prosperity, but also pure control. So what to do? Let's say this sector is growing. What to do with a sector that is growing, but is less a private sector from what we thought it was before, or from what it actually was. So that's the last comment I would like to make. Thank you.
Thanks very much, Alicia, and thanks again to Reinhard. I'm very happy because this is exactly the kind of debate we want to trigger with this paper. The paper is not the conclusion of any question. It's an opener for the kind of discussion on what exactly are the right categories to think about Chinese economic transformation. So all the points you made and the questions you asked, I think, are exactly what motivated us to do this work, which, as you kindly mentioned, Alicia, has been a labor of love and has kept us active for the better part of a full year with Tianlei Huang. I will start with a few points about the categorization and the blurring of the categorization. So this is a bit nerdy, but we think that our categorization in three buckets, majority-owned SOEs, real private sector firms with a stake less than 10%, and the blurred intermediate category, which we call mixed ownership enterprises, this solves a lot of problems. Because we acknowledge that the boundaries are blurred, the mixed ownership enterprise category is not negligible, but we think that the two more clear-cut size, SOEs and what we call non-public enterprises, are actually pretty clear-cut. So we kind of ring-fence the blurring in between, and we think that's a much better way of looking at it than the kind of data sources that you used in your calculation on listed companies, Alicia, based on Bloomberg's categorization of public versus private sector, which itself is based on the public disclosures and this concept of actual controller, whether that is a public or private sector entity that I alluded to very briefly in my initial remarks. So one suggestion I would have, of course, I take your suggestions of future research for us, but one new suggestion is that you could replicate the same curves you presented us, but using the three categories of SOE, MOE, and NPE, and look at how it looks like. And it won't be completely different, but it will give you more granularity, which I think would enlighten our debate. And this is a little bit of homework to look at the ownership structures. But again, there is quite a lot of transparency in China, interestingly enough, about this. Let me take a number of questions that have come from the audience. Some of them are from anonymous participants. I will take them very quickly, and you can keep asking questions as is appearing on the screen now. But many of them are questions of clarification, so I think they are of general interest. So one question, did you also do a sectoral analysis? So if the change has been triggered by different sector composition, for example, tech companies, in the Fortune 500 sample and also in the market cap sample. And that was also a question raised by Reinhardt in his remarks. So the answer is yes. We looked at that. It's in the paper. And the sectoral effects are very powerful. So it's part of the story. But it's only part of the story because there are some sectors like consumer goods and especially like manufacturing, and Alicia alluded to that, where you really see transformation and substitution inside the same sector. So if you look at energy or telecoms, they're state-owned, they stay state-owned. If you look at tech platforms, they're private sectors, they stay private sector. But if you look at manufacturing, for example, which is a big sector and very important for the economy, you see a lot of substitution in those rankings of SOEs with private sector firms. So the sectoral story is part of the story, but it's not the full story. Somebody asked when and where the study will be published. Well, it's on Bruegel.org. Could we get the slides of your presentation? If they're not already on the Bruegel website, they will be very soon. Where do you gather your data on ownership structures from exactly? So we use a commercial service called Wind, which is very mainstream in China, and which we believe is very reliable on ownership based on corporate disclosures and corporate registers. So experience suggests that this data is of high quality in China, even so there have been variations over the years. And there are some cases which are difficult. We discuss Huawei in the paper, we discuss Haier in the paper. So there are borderline cases where it's difficult to know the ownership for sure, but they tend to be very minor in the sample. So even if we get those cases wrong, that will not change the overall picture. And they're typically for non-listed companies. And one of the observations we make is that there are increasingly the large companies are listed, especially the private sector ones. It's still a balance between unlisted and listed. But for listed companies, for all the problems in the Chinese stock market, there is much more transparency and reliability, at least on the kind of parameters we observe. That's also why we don't insist too much on profits, because these are easily manipulated even for listed companies. But if we look at revenue and ownership, we think we have high quality data reliability. The other questions, can you trace back the causes of the shift? Is it linked to global pandemics? No, of course, it predates the pandemic. Isn't the real difference the issue of state aid, subsidies, and other state intervention? I think Alicia gave some elements of response to that. I will also add that subsidies are often difficult to measure. So I will need to study Alicia's work to better understand her data sources. Let me now react to, very briefly again, to some of the points that have been made by Reinhardt and Alicia. One is about this idea that we have the private sector now struggling, in contrast to previous periods under, especially Jiang Zemin and Hu Jintao, when the and Deng Xiaoping, both before and after Tiananmen, or more accurately before Tiananmen and after the southern trip of Deng Xiaoping in early '92. So there is this view that, these were great times for the private sector, but now under Xi Jinping, they're really having a difficult life. I think there may be some truth in it, but it's certainly a massive oversimplification. And the reason for that is that life for the private sector has never been easy in China, even under Jiang Zemin, even under Hu Jintao. I recommend reading a book, I don't remember the author, but titled Mr. China by a British author who published it in 2004. So this is kind of the heyday of the private sector in this narrative, right? This was the golden days when private sector life was so easy. It shows how difficult it was, and obstacles at every step, some coming from the state, some coming from the general lawlessness, actually, of the business environment in China. And if you look at this very idea, and we looked at press coverage, we have some references, for example, in a blog post that Bruegel has published last month, of, when people say, okay, now it's the end. The private sector had a good time, but now it's over, the state is coming back. There hasn't been a 2 or 3 year period since 2002, in the last 20 years, when you haven't had a wave of comments saying, now it's over. The private sector had a good time, now it's finished. So I'm not suggesting that the regulatory crackdown last year was insignificant. I think it was arguably the most powerful of those episodes since Tiananmen, even so I'm not entirely sure of that, but I think it's a very plausible proposition. But I would also say that it was not completely unprecedented, if not in magnitude, at least in its nature. There have been many indications that the state wanted to reverse the trend and put forward the state sector over the last 20 years. So we just have one in a series here. And therefore, and I think we already see perhaps the end of this episode. Of course, it's too early to be sure, but if you look at the recent pronouncements by Liu He and other policymakers in China, you see that they want to say, okay, now we want to favor internet platforms, we want to favor private sector innovation. So maybe that's a bad thing, because that means they will give subsidies and the boundary will be blurred, as Alicia suggested. But at least in terms of that trend of the private sector advancing, it suggests that the trend might continue. Strategic use of SOEs, MOEs, and PEs, that was a question, a multi-faceted question by Reinhardt in terms of internationalization, innovation, social experimentation, interior provinces, and common prosperity and anti-monopoly policies. It's a very interesting question, and being French, I'm sorry to say that, I cannot refrain myself from projecting a number of things I've seen over the years in terms of French industrial policy, guidance, complementarity between the private sector and the state-owned sector, etc. I mean, there are many things. I'm not saying France is like China, it's not, and it's a free country, but many of these things resonate for me in a way that cannot necessarily be transposed to, say, the United States. I think, yes, I mean, of course, the government wants to promote growth and expansion of Chinese economy, including innovation, and the private sector is an instrument for that. But in a way, so is the case in any country. So it's very difficult to say this is unique to China in terms of strategic use of the private sector, as you put it, Reinhard. And by the way, coming back to MOEs, I want to clarify that maybe I wasn't clear enough. We consider that this mixed ownership category, this intermediate category of blurred lines, we view it as part of the state sector. So in our narrative, the private sector is only what we call NPEs. And when we say private sector versus state, we consider the state sector to be SOEs and MOEs. And interestingly, by the way, sorry, I'm rambling a bit, MOEs is not a massively expanding category. It's actually surprisingly stable. So this is not a new phenomenon, this blurring of boundaries. It has been around for a while. It's just that, maybe it gets more attention now, or it takes different forms, but per se, it's not particularly new. So the main question of Reinhardt, the CCPization, and has it changed the character of the private sector, this very stimulating comparison between Jack Ma and Khodorkovsky, and this question of basically whether our paper is about something important or not. I will argue, maybe unsurprisingly, that the relevance of these distinctions remains. And actually what you have seen in Russia is that it's not that there has been a change of the significance of private sector versus state sector in qualitative terms. It's that in Russia, there was an actual reversal. So basically, during the 90s, the private sector became very big and largely dominant in the Russian economy. And since Putin came in, and especially after Khodorkovsky in 2003 and a couple of other things like that, the state sector has become dominant again. So if you do the same analysis, and again, we haven't published that yet because we don't have a very large sample and we have to do more homework, but it's very clear from the tentative work we have done that the same analysis applied on Russia shows a very completely different picture, where the state sector has regained dominance over the Putin period in a very graphical way. So in a way, the Russia story suggests that this boundary is significant. And if you see a trend reversal, it means something. So for the same thing to be observable in China, you will have to be able to observe the trend reversal in China. And again, I think our little dip in market cap is not that. We'll see what happens in the next few years, of course, and we will monitor that, but that's not what it is. Now, I have said the private sector is profit-seeking in a way that SOEs are not. And I think that's a fundamental difference. The incentives of the private sector are different. The shareholders of private sector companies, which by the way tend to be concentrated shareholders, so they're controlling private sector shareholders, typically families or an individual or a group of individuals. They want to achieve something with those companies, which is get very rich, that has no equivalent in the state sector and that changes completely the behavior. And in a way, the CCP is okay with that, or apparently is okay with that. Where the CCP intervenes is in some control freakery about data and public narratives and media narratives and information. So they crack down on content platforms because there is information there that can be, seditious. They control education companies because that's where there is a narrative about Chinese history and the like. They control data-rich companies like Didi, etc., because they believe there is national security there. But they're not, in the regulatory crackdown of last year, fundamentally questioning the fact that private entrepreneurs should want to get rich. I mean, we can discuss that, and obviously what happened to Jack Ma is disturbing, and there is an anti-monopoly thing that could be leveraged to make sure that people don't get rich. But at this point, these are baby steps, really, in terms of the Chinese economic model. So as I suggested, you would need something much more powerful in terms of sending the capitalists to the gulag, in terms of changing the incentives in our analysis. Now, why didn't we observe profits? Because profits is an ambiguous quantity to observe. Private sector companies have profits that come from innovation and productivity. SOEs have profits that come from rents. And so that's where the monopoly, the anti-monopoly story cuts both ways, because there are excessive abnormal profits in the SOE sector, particularly, for example, in the state-owned banks, but in other parts of the SOE sector as well, that are not explained by competitiveness, that are explained by rents and anti-monopolistic practices. Occasionally, the state has tried to go against that. For example, that's how the PBOC favored the fintech and P2P platforms in the 2010s. My PIA colleague, Martin Schorzempa, has a forthcoming book about that. That was explicitly a way to challenge the rents of the SOE banks. But still, I mean, profits are ambiguous because you have rent-related profits largely in the SOE sector. You have innovation-related profits largely in the private sector, not entirely. And so that makes the comparison a little bit difficult to interpret. Let me stop here. I think I addressed most of the points. Oh yeah, no. United Front and documents and laws, like Alicia said, data sovereignty. I mean, all these statements of policy are very impressive. The question is, are they impactful? And I will insist on the fact that there were statements that could be read like that, like a backlash against the private sector, even before Xi Jinping. So if you want to select, I mean, China is a big place, obviously. There are many things happening there. And if you want to select things that look like they're inimical to the private sector, I think we didn't have many of them under Jiang Zemin, but there were quite a few under Hu Jintao, and there are a lot under Xi Jinping. The reason we looked at the numbers and not at the statements is that we wanted to look at the real thing. And we think that the statements of policy in China are only loosely connected with actual policies, and even actual policies are only loosely connected to economic outcomes. And that's why we wanted to have this very simple, very robust observation of what's happening in an unbiased sample, biased only by size, but for the largest companies, completely unbiased sample of the Chinese corporate reality to form our opinion. I have to insist, and I will stop there, that we didn't expect to find that. We were curious about what we would find, but we, maybe I shouldn't say that. It's not always the case in research projects that you start a project without knowing what you will find out. But that was the case with this one. We were surprised. Reinhard, over to you.
You looked at some of the questions I raised and gave very interesting answers. I'm still not completely convinced that the transformation suspicion that I have with regard to the role of private sector enterprises can be fully addressed if you just look at the economic numbers. So when I compare Jack Ma to Khodorkovsky, obviously that is an uneven comparison. I acknowledge that, but still, I think in one regard, I consider it characteristic that people that played not just the role of an economic type, but also the role of an intellectual player, the role of a public policy contributor, like Jack Ma and Khodorkovsky, have been demonstrated that this is not acceptable, and so in a way the development of the political role of the private sector has been capped, I would say. That's my suspicion, at least, and that might have possibly an even more influential role to play in the future than just the growth numbers per se. And the second thing that I would like to raise again is, which are the measures that we've seen in dealing with the private sector companies should be sort of analyzed also with the expectation that we might learn something about what international investors might up against. For instance, when you look at the United Front work, obviously that is not restricted just to Chinese private sector. That includes the international investor, and maybe that dimension would also be instructive for us.
That's great. Alicia, over to you. Unfortunately,
Yes,
I've spoken too long, so we're getting close to the end, but you have the floor.
I'll be very brief. First of all, just to clarify that our data is actually the same. It's Wind data, so we don't use Bloomberg data. We don't like mixed ownership. I don't like to classify mixed ownership, and I tell you why. Because if you do, you find a company like CTE, which is purely state-owned, in your sample as not state-owned. Or, for example, Huatai Securities. Simply because the Jiangsu government sold 10% to an unrecorded party. How do I know that it's not a party that also belongs to the state? So, having looked at these numbers for very long, I just don't buy the fact that because you list a company with a minority, float of 10%, that's going to be a private company or even a mixed ownership company. I would also, because you got into the data, and I didn't talk about the data because I felt I wanted to have a broader conversation. I would not include financial institutions either in the sample because they are listed, but they're certainly the arm of the government. And we see that even in the way China conducts lending policies. And I'm talking about the 5 largest state-owned commercial banks. So even if you dig and dig and dig, there's always something you may not know, I have to say, especially who actually holds the ultimate ownership. But on the point of whether the current, whether the current wave is less pro-business, which is one of the points you made, that this was already the case during Wen Jiabao times. I just want to read Xi Jinping's speech at the Central Economic Work Conference, which just published, I think, yesterday. The speech was on December 28th, but it just got out, and there is a sentence there which says it all as to his impression of the private sector, and it's something like, due to the lack of awareness, possibly of the CCP, and lack of supervision of the CCP, capital has expanded in a disorderly way, manipulated arbitrarily, and made huge profits in some areas of our country. This requires regulation, regulating the behavior of capital, seeking advantages and avoiding this. It's a totally different tone. We should not allow capital predators to act recklessly. I don't think the private sector at the current juncture will thrive in China. And it's just my take. I can't prove it, but the sound of what I read and the public statements are in that direction, in my view. That's all.
Thank you so much. And of course, we won't be conclusive on these issues because there is so much space for honest disagreement here. And again, my happiness today is that we have that debate. And I think it's an important debate to have. There are no certainties either way. Even so, I think there is something to learn from those facts. Let me address a few last questions. One that came from the audience: do we account for the complexity of state structures, especially those that come from the local government? And the answer is yes. There is a discussion in the paper of the different levels and different instruments of state ownership and control. So we consolidate the state control in a way throughout all the different agencies and governments, etc. To Alicia, I will just observe on your point on data that we classify ZTE indeed as being part of the state sector, and I emphasize again that we consider MOEs part of the state sector, but we also observe when the state has a majority. But we think the boundary between NPEs and MOEs in our classification, between non-public and mixed ownership enterprises, is much more significant in terms of what we want to look at than the boundary between MOEs and SOEs. And of course, the big state-owned banks are all classified as SOEs, and that's very important. Now, there are a few financial sector companies that are private sectors. There are not very many. One boundary case, a bit like ZTE, but between non-public and mixed ownership is Ping An. But for all the recent years, we classify Ping An as MOEs and as such as part of the state sector. Let me conclude with the big point of the two big questions of Reinhard. The one I will not really answer is the one on internationalization, both the role of foreign investors in China and the internationalization role of private sector versus state-owned companies from China going abroad through the Belt and Road or other ventures. The reason I won't answer that is that we need to do more research. So one of the follow-up projects we have with Tianlei Huang is to look indeed at the internationalization patterns of those companies and whether we see different patterns in private sector versus state sector companies. I'm not aware of lots of good research having been made looking at this kind of data, and we want to explore it. But in a way, the biggest question is, I quote Reinhard, the development of a political role of the private sector has been capped. And that's why the Jack Ma story is so important, and that's why it echoes the Khodorkovsky story. I think that's true. I think that's right, that there has been a strong signal. I would debate whether it's the first time the party has sent that signal. I would argue that it's not the first time, but I think with Jack Ma, the party has sent, and Xi Jinping has sent a very powerful signal that capitalists in China, A, shouldn't be called capitalists, but B, they can become rich, but they shouldn't go into politics. And that would be my framing of the whole field that we're looking at. When we look at China, we have to separate the politics and the economic structures. It's not the same thing. So the notion, we know now that the notion that Chinese economic opening and liberalization would bring forward political liberalization. That was the wrong assumption. It hasn't happened that way. It probably won't happen that way. But that doesn't mean that the economic structures don't continue to transform themselves with more market-based mechanisms and with more private sector activity. And this is the distinction we want to track. At no point do we suggest, of course, that this is transformative in terms of the Chinese political system. We actually don't believe so. So the greater economic freedom, if you want to call it that way, that's a loaded expression, of course, doesn't mean greater political freedom. And I think in that sense, what happened to Jack Ma has been a clarification. But that doesn't imply that what will happen in China will be identical to what happened in Russia. And the reason, frankly, is that China is a very different economy. Russia is a rent economy, which is massively dependent on extraction of energy and other natural resources. China is a vastly more diversified economy that relies enormously more on innovation, and innovation happens to a large extent in the private sector. We see no evidence that the Communist Party has acted to kill that goose that lays the golden eggs. And that's, I think, why this debate on China is so difficult, because it forces us to question this very well-anchored assumptions that we all have, I think, in free countries, that economic freedom and political freedom are related. So I don't want to say this answers any of the questions that have been asked, because I think that would be a complete overreach. But this is certainly the way, speaking for myself, my thinking have been transformed by this project. Thanks again to our audience, our participants, some audience in the room actually in person at Bruegel, despite the still intermediate conditions in terms of COVID policies. But special thanks to my colleague Alicia Garcia Herrero at Bruegel, and especially to Reinhard Bütikofer. Reinhard, we know you're under Chinese sanctions. That probably has to be mentioned here, but we want to continue that conversation with you, and we're very grateful and honored that you participate in this exchange at Bruegel here. Thank you very much.
Thank you.